Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. In this video, I'm going to show you an example of one of our morning gap trades. You see it on the screen, Hasbro, HAS. But first, I want to explain a little bit about what I do and a little bit about what gap trading is all about. I do a couple of things. I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open create an opportunity. And the opportunity is for traders that can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. In the course, traders learn exactly which stocks this works the best with, what are the criteria we're looking for, what type of volume do we look for, how much of a gap higher or lower do we look for, and most importantly, how do you calculate the specific price where these stocks will be drawn to and have that price reaction from in the other direction. In addition to these things, there's a whole host of other things taught in the course that when all put together create a total gap trading strategy. Now, the other thing I do is give traders an opportunity to get my gap trade sent to them each and every day at 9 o'clock in the morning Eastern Standard Time, 30 minutes before the opening bell even rings. Here's a copy of the email that went out this morning. As you can see, it arrived at 9 o'clock a.m., that's Eastern Standard Time, right into our inbox. Now, this morning, there were only two potential gap trades on the board. It's Monday morning, the market was relatively quiet, and we're only interested in looking at the opportunities that have the highest probability of success. Some days we get 6, 7, 8 opportunities, and some days we only get a couple. However, within these two opportunities, one of them hit their actual level, as you saw on the screen before. That was Hasbro, HAS, gap higher. Resistance levels are $98.72, $139, and 102.06. The second and third levels are if the stock should continue higher. These are additional trading opportunities. We can get a trade at the 98.72, for example. The stock can pull back as it's supposed to, and it can continue up later in the day and produce another trade. That happens quite a bit. The stop and profit target is about 50 cents to 90 cents. These are minimum profit targets. Let's go ahead and analyze the chart of Hasbro in some detail. We're on a 10-minute chart, and as you can see, the prior trading day, which was Friday, Hasbro closed all the way down at $91.45. This morning, the stock was gapping higher at the open, creating the opportunity that we're looking for. Traders that have taken my course were able to calculate the same level that I sent out at 9 o'clock in the morning. $98.72 was the high probability price level where the stock should first be drawn to like a magnet, and if reached, should have a price reaction from in the other direction. As you can see, in the third 10-minute candle of the day, the stock came up to that price level, made a high of 98.88, well within our stop loss limitation, and just minutes later, the stock was at a low of 97.75, giving us almost a dollar pullback from that initial hit of the 98.72. Now, the stock bantered back and forth a little bit right around the 98.72, and it's important to understand why. And that's what makes this strategy so successful. Traders that have taken my course understand the why these price levels are important, why stocks are drawn to certain price levels, and you can see the importance of this price level. The stock wanted to hang around that price level for a little while before actually falling away. At the time I'm making this video, the stock is at $97.14. That represents about a $1.50 pullback from the initial entry price on the short trade up at 98.72. Now, the other cool thing about this strategy is in my course, I teach traders how to take trades like this and turn them into risk-free, emotionless trades where they learn how to take some of the minimum profit target, take it off the table, and turn the rest of the trade into a risk-free, emotionless trade, potentially getting a lot more out of this stock on the downside. If the stock should come down to 96 or 95 or $94 today, we have an opportunity to take advantage of most of that gain. Whether it does or doesn't at this point doesn't really matter because we've already booked a profit on this trade. For all intents and purposes, this trade is over unless you have what's called a trailing position. All that's discussed in my course in detail at Lazy Gap Trader. Folks, we do this each and every day. This is a strategy that you can use each and every day to your advantage. You can learn everything there is to know about trading the gaps successfully. This is a strategy that you can use for the remainder of your trading career. If you want to learn more about what's involved in the gap trading strategy, come over to visit my site at lazygaptrader.com and I can teach you everything you need to know about trading the gaps. Anybody that takes my course gets my full and complete attention. No question ever goes unanswered. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.